On Business Incorporated today, Ghana begins the implementation of EU Interim Economic Partnership Agreement. Bread prices in Egypt set to increase because of change in subsidy program. And private sector in South Africa supports government relief fund after unrest. Hello and welcome to the program. I'm Ini John Mekwa. Well, let's start off on the African continent with market figures. The market shows that intraday Nigerian exchange was marginally negative in trading, while South Africa's JSE was in the positive territory, up 0.39%. Egypt followed suit, though very, very marginal. Now, the market in Kenya is closed, and Tuesday's trade ended negative, shedding 0.57%. In the Middle East, investors displayed mixed sentiment at intraday. Abu Dhabi shed 0.38%, while Dubai inched 0.63%. Elsewhere in Saudi Arabia, the index lost 0.45% at intraday, while the Qatari market traded in the green, up 0.14%. In Europe, the Pan-European Stock 600 added 0.5% by mid-morning to a new record high, with travel and leisure stocks climbing 1.5% to lead gains as almost all sectors and major bosses entered positive territory. We have more from that area now, as we have joining us to tell us about that is Ashutosh, joining us from Frankfurt to tell us what's going on in the region. Hello, Ashutosh, welcome to the show.
Hello, Ini. Thanks a lot for having me.
Yeah, you're welcome. Well, Eurozone business expanded at its fastest in 15 years in July, according to the PMI survey. What's driving this recovery?
I mean, it's simple. It's to do with the reopening of the economy. There are more people who've been vaccinated, increasing number of people who are getting vaccinated. So many of the restrictions have been lifted. So that has meant come as a boon for the services sector. The services businesses like restaurants, cafe, hotels, they're all doing exceptionally well. So remember, the manufacturing sector had been doing well for quite some time. It continues to do well because of that, as you can see with that composite PMI data, but it was the services sector which was actually struggling because of those strict lockdowns. But now even the services sector has come to the party. Having said that, the economy is still not out of the woods. We've been talking about how Delta variant cases are rising. That could mean increased restrictions. Again, bad news for the services sector. As far as the manufacturing sector is concerned, they have already been flagging higher input costs and shortages of materials. So all these are these aspects are something that investors are keeping an eye on.
About the services sector in China, it's also growing. I guess it's also the expanded program of vaccination that is driving that.
Well, if you just consider the PMI data, that CAC-SIN PMI data that was released earlier today, that you'll notice that it has actually, the services sector is growing at a higher pace than since May. Like from May, this is like the highest pace that it has grown. And now, first of all, we have to be clear that this survey happened before the recent outbreak of coronavirus cases, the most recent ones. But the high confidence among the purchasing managers also shows that there is a sense of confidence that in the ability of Beijing to actually contain these outbreaks. They've seen it in the past. Beijing has a track record. If you go and see over the past 1.5 years, even most recently, it managed to successfully contain an outbreak in southern China. So that's one of the things that is giving them confidence. However, if you speak to analysts, they will say that August is not going to be as rosy as it was in July, because more restrictions would kick in, and they've already started kicking in. That is going to be a dampener as far as the services sector is concerned. And we all know that Beijing's measures to contain contain the virus are draconian as compared to other countries. So when they kick in, that is really going to be a big blow for the services sector, mainly tourism and travel.
All right, moving away from that now, German lender Commerzbank reported its second quarter result. How did they fare?
Well, they posted a wider than expected loss. They posted a loss of more than 500 million euros compared to a profit of around 200 million euros in the same quarter last year. The losses were mainly because of one-time charges. So remember, Commerzbank is going through a major restructuring that would see it cut down 10,000 positions, bring down costs in order to boost its return on equity, its bottom line. So that is what is happening. And one analyst actually said that if we just talk about the restructuring process, it was proceeding well because the revenue was stable, the underlying revenue was stable, and the costs were coming down. But investors had some other ideas, and that's the reason why the shares were down 4% today.
Thank you so much, Ashutosh, for giving us updates from Europe, and enjoy the rest of your day.
Thanks, Amy.
All right, so let's go to Asia now. Shares in major Asia-Pacific markets rose today as a private survey showed accelerating Chinese services activity growth in July. Mainland Chinese stocks closed higher, with the Shenzhen components advancing 1.72% to 14,990.12, while the Shanghai Composite gained 0.85% to 3,477.22. Hong Kong's Hang Seng Index closed 0.88% higher at 26,426.55. Our shares of Chinese tech giant Tencent jumping 2.42% after seeing heavy losses. They really made the news yesterday. Well, Caixin Market Services Purchasing Managers Index for July came in at 54.9, up from July's reading of 50.3. PMI readings above 50 represent expansion, while those below that level signal contraction. PMI readings are sequential and represent month-on-month expansion or contraction. Now, let's go over to South Korea, where Kospi advanced 1.34% to finish the trading day at 3,280.38. In Australia, the S&P AX 200 gained 0.38% to close at 7,503.20. Stocks in Japan declined as the Nikkei 225 slipped 0.21% to close at 27,584.08. Other topics index shared 0.5% to finish the trading day at 1,921.43. MCSI's Broadex Index of Asia-Pacific shares outside Japan rose 0.94%. We go over to U.S. now, where stock futures were in a negative territory early trade after the S&P 500 rose to another fresh record during Tuesday's regular session. Dow Jones Industrial Average futures were 20 points lower. S&P 500 futures also sat near the flat line, while Nasdaq 100 futures were in mildly positive territory. In the regular trading session, the Dow Jones Industrial Average jumped 278 points to 35,116.40. The S&P 500 gained 0.8% to a new all-time closing high of 4,423.15. The Nasdaq Composite rose 0.6% to 14,761.29. So let's go to London now and get updates of what's going on right there. We have Juliana joining us from our London studios. Hello, Juliana. Good afternoon.
Good afternoon, Innie, from behind the scenes.
Yeah, I see that. That's what we're doing this afternoon. Well, all the same, I know you give us the update because we hear the twin impacts of pandemic and inflation has hit the service sector. So even though it's growing, but it's not growing as, even though it's growing, but it's growing at a lower pace. So you discussed that with Chimeze in the morning, but we'd like to know how the market is reacting to that data at this time.
Okay, so yes, right. I did discuss it with Chimeze early this morning. The all-important PMI data, which has a look at how the private sector is going. Now, the services sector, which is all important because, of course, this contributes 80% to British GDP. It came in at 59.6 in July, still high, because, of course, anything above 50 represents expansion, but it's still well below that 62.4 figure we saw in June. So it does look to see that the recovery across Q3 in the United Kingdom could be much slower than Q2. So that is a little bit of a cause for concern. Also as well, at this time of the month, traders are awaiting the all-important private sector jobs data, which should be coming in anytime now from Washington. This is ahead of the non-farm roll data expected on Friday. So lots of sentiment here, lots of sentiment across the globe, but those gains that I reported early this morning on the FTSE is still there at intraday.
Okay, and then British holiday makers heading to Europe are said to pay around £6, and it's all part of the visa-style fees and security forms. What more do we know about these visa-style fees and security forms?
Yeah, this is what the British media have described it as an American style plan. Pretty similar to the United States electronic system for travel authorization. That's a mouthful. This is the European Travel Information and Authorization System. Obviously, we're no longer in the EU because of Brexit. So now, by the end of next year, if you are a British traveller travelling into the Schengen zone, you need to put your details in this electrified system, and it costs €7.10, and that's the equivalent to about £6.20. Not only is this a kind of visa waiver, this is also about Interpol. So just as when you want to travel into the States from the US, you need to put your information into the system to see if there flags up any problems. Shouldn't be an issue, of course. £6 is still £6, but the only problem is applications could be as quick as minutes, or it could take up to 30 days. We have heard from a junior minister here in Britain. At the moment, there doesn't seem to be any reciprocal plan. So for now, any EU traveller travelling into the UK, putting aside any of the pandemic restrictions, you won't have to pay a fee.
Okay, good to know. Well, thank you so much for that update, Juliana, and enjoy the rest of your day.
Thanks, Innie.
So let's, slide to the African continent now. The Ghanaian government has started the implementation of the Ghana-EU Interim Economic Partnership Agreement, effective the 1st of July 2021. And under the terms of the IEPA, Ghana will progressively liberalize tariffs for 80% of the total volume of exports from the EU to Ghana. The cumulative tariff cuts for approximately 22% of applicable tariff lines in 2021, 50% by 2024, and 100% by 2029. Key elements of the agreements include duty-free, quota-free access to the EU for all imports from Ghana, except arms and ammunition. There's also the asymmetric and gradual opening of 80% of Ghana's market to EU goods, taking full account of the differences in levels of development between Ghana and EU. The EU is Ghana's largest trading bloc and is a significant market destination for many of the top non-traditional horticultural exports, while Ghana's export to the EU market is about 40% to the country's total annual exports. We'll take a break now. When we come back, we'll continue with stories on the African continent. Do stay with us. It's Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated on Channels Television. Well, Egyptian President Abdel Fattah al-Sisi is asking for an increase in the prices of bread, which is currently subsidized. The president is revisiting the issue for the first time since 1977, when the then president reversed a price rise in the face of riot. The world's biggest wheat buyer looks to curb spending and cut the budget deficit at a time of accelerating global inflation, although Mr. Sisi did not specify the amount of any potential increase, but any change to the food support system would be highly sensitive. Bread is currently sold at 0.05 Egyptian pounds, while loaf to more than 60 million Egyptians who are allocated 5 loaves a day under a sprawling subsidy program that also includes the likes of pasta, rice, and costs billions of naira. Now, to give us updates on what's going on in Egypt concerning this. We have joining us from Egypt is Edward Yeranian, a Voice of America correspondent in Egypt. He's going to give us what's going on there. Hello, Edward. Good afternoon.
Hello, Ini. There are a number of problems with the subsidy program. One of them is that the prices are so low, they're subsidized so heavily that people use the bread to feed animals, and not just sheep or goats and things like that, but also ducks and chickens. And this ultimately is way beyond the subsidy program. It's something that people are taking advantage of to raise animals and sell them on the free market. But I think it's not just the president's decision, it's the International Monetary Fund that has urged Egypt to make what they call reforms. I'm not really sure what is a reform and what is not, to be honest with you, but I mean, clearly subsidizing bread to the point where people use it to feed their animals is something that needs to be reformed. So I think the worry, of course, is that there will be riots, as there were in 1977. But I think there's some international powers that be that would like to see riots. And, you know, I say that a bit sarcastically, but I think it's the truth.
Threats of possible riots, are there security moves in place to curb or to quell it? You know, do we see anything like that on the streets in Cairo or any other part of the country?
I haven't seen a lot of protesting in recent years, not since 2014, 2015, when we were still having problems over the transition, the Arab Spring transition, and then the ouster of the Muslim Brotherhood. The problem is, of course, that there are some people that would like to see trouble in order to destabilize the government and bring back the Muslim Brotherhood. I personally, you know, this is not my decision one way or the other, but my impression is that the majority of Egyptians don't support the Muslim Brotherhood at this point. So I don't think that that's going to fly if there are protests that try to cause the fall of the government. But I think there are some people that would like to see that, unfortunately.
Well, very unfortunate. We do hope it doesn't turn out to protest. I mean, because at the end of the day, when we have protest and violence, it takes a lot of life. And, well, thank you so much, Edward Yeranian, a Voice of America correspondent in Egypt, for bringing us up to date on that issue in Egypt, and do enjoy the rest of your day.
My pleasure, Annie.
So moving on now, the year 2000 was a record-breaking one for African tech startups, according to the African Tech Startups Funding Report. 397 companies secured $701.5 million worth of investment. The report details how Kenya, Nigeria, South Africa, and Egypt are the premier investment destinations on the continent. We can easily term this one of the gains of COVID-19. So how do we consolidate on this gain and engage especially the youth and boost the African economy? We have Olumide Soyombo, co-founder Bolton Capital and Blue Chip Tech Limited, to share his thoughts on that. Hello, Mr. Soyombo. Thank you so much for joining us.
Hi, thank you for having me.
You're welcome. So how much of a problem or challenge is funding in the African tech space?
I would say it's improved over the years. I remember when I started investing in startups in 2014, we thought about setting up like an accelerator, copying the typical Silicon Valley model of calling for entries, bringing startups into a hub, and work with them for 3 months with a hope to putting them in front of bigger investors, having had some early traction, only to find out that in the market then in 2014, there were no bigger investors. So you had to put a second seed into those companies. So it's very interesting to see how we've come from that in 2014 to a situation where today interesting founders and super founders and then raise early seed funding, and even pre-seed funding of a couple of thousands of dollars in a few days. So I think over the last couple of years, I mean, even your entry point, you talked about the attention and the funding coming to African startups now. It has improved over the years, and it can only get better from here on.
All right, so we have a lot of youths who are tech savvy. They have a lot of creative and innovative ideas. What practical steps can move these ideas to reality?
Well, I think the first thing I tell everyone who sets out or who says, hey, I have this idea or I want to be an entrepreneur, I want to build this thing out. The first thing I usually say to them is, what bet have you taken on yourself? And what risk have you taken on yourself? Because you need to have taken a risk on yourself before anybody else would believe in you. So I first say, okay, you need to get out there and take that risk on yourself. It's either maybe leaving a job to start your own thing, and then iterate slowly, right? So you have people saying, I have an idea, but I'm looking for an investor. Why is an investor going to back you when all you have is just an idea? What have you done about that idea? What steps have you taken? So what I tell entrepreneurs is iterate slowly, get something out into the market, listen to the customers, and then come back again and iterate again. And that's the way to build stuff. I always tell people that the only way you can know is to do. So you have to go out there to do, and then investors then see your early traction and then can then come and back you.
Well, saying that there are numerous opportunities in the tech space, what should be imputed into the education curriculum in Africa, for instance, to bring up a new generation of individuals with a mindset of creating employment and not coming out of school to seek employment?
Well, I think first for me is, I think we also have to change that narrative of seeking employment as being, or going for entrepreneurship over seeking employment as either or, right? Because some of the very interesting founders we backed, actually people who've worked in the company before, seen a gap, and then decided to go after it. So I encourage even folks before starting out to gain experience in an industry, and that usually gives them a sure footing or some sort of sure footing to go out and explore. So maybe they've seen a gap in the company they're working at, and then they can then set up a company to go and tackle that gap specifically. But that said, in terms of our education system, you find out that our education needs to start focusing on experiences that promote innovation, right? Experiences and materials that teach people how to innovate, how to iterate. I'm seeing also a lot in some of the private universities, and I hope that will translate also into some of our public universities in Nigeria, where they're bringing out courses on entrepreneurship to start teaching people how to get ready for entrepreneurship, even as they're in universities. I think those are some of the key things that we need to look at in our educational system.
All right. Thank you so much, Mr. Shiombo. Mr. Olumide Shiombo is co-founder, Bolton Capital and Blue Chip Tech, joining us to share his thoughts on funding startups on the continent. Thank you so much and enjoy the rest of your day. So in South Africa, various organizations are doing their part to help small businesses get back on their feet and have teamed up with communities, especially in townships, after recent civil unrest is seen in the country. This comes after government last week announced that it will allocate 3.9 billion rand through a relief package to those whose businesses were damaged and looted. Researcher at the Institute for Economic Justice, Bruce Sibeko, tells us how this stimulus package will help in assisting those affected.
6 billion plus, because ultimately it comes up to about 38.85 billion. And of this proposed package, it's about 26.7 billion of it is for the grants for the unemployed, which were introduced last year due to COVID. Be extended now to caregivers as well. About less than 1 billion will be allocated to police in the South African National Defence Force. About 4 billion will be for Sasria, which is, the insurance sector. And 5 billion will go to the unemployment insurance fund, as well as the temporary emergency relief scheme. So that's supporting, workers and wages. And about 5 billion of it is actually estimated to be the extra tax relief measures that have been put on the table. And just over 1 billion will be for small businesses in new money, but the total for small businesses is about 2 billion-ish.
Well, that's it on the program today. Thank you so much for being a part of it. I'm Ini John Mekwa.